Welcome to Market Matters. I'm Nadia Hassan together with Sulhi Azman. It is, of course, the eve of a very long weekend for us. Actually, everybody's already in holiday mood, I think, La Sulhi, because as we can see, okay, fine, the roads are kind of empty, the shopping malls are not, and we have a hope wherever you are, you try to stay safe on the roads, don't you?
Yeah, correct. And and I think starting from tomorrow you have Maulid Rasul and tomorrow, and also you have Christmas on the 25th.
Yeah, so it's going to be our last Market Matters until next week. It's going to be a very long weekend. We're going to enjoy it, but before that, we'll just tell you what actually happened today. KLCI actually closed about 20 points higher at 1,663. It is an impressive little jump, but unsurprisingly, trading volume was it was below the usual at 1.63 billion shares. I think a lot of people have already gone on their skiing holidays, or they've actually gone off on their trips. So you do see some selected kind of interest, but I honestly feel that a lot of it is still very external influenced. I mean, what do you think?
Yeah, there was an excellent influence as well.
But there was an internal one too, exactly.
Correct, and it's also, I mean, today the Statistics Department released the November 2015 CPI data, which recorded growth of 2.6% year-on-year basis. The growth was due to lower transportation costs as a result of the managed float pricing mechanism system implemented last year.
So does that mean people are spending more though?
Yes.
Do you think they are, or they have more spending power?
I think they're also a bit cautious, Nadia, because with all the GST coming in and so on,
it's going to be close to a full year. Malaysia's inflation rate, unsurprisingly, rose at a faster than expected pace, and this was on the back of higher prices, right? Alcoholic beverages and tobacco products. Regionally, though, it was a nice little sea of green because a lot of markets are closing early this week. I think tomorrow only Singapore is doing half day. A lot of markets are doing half day. Hang Seng was up about 0.97% to 3,3035. You can see it on the chart. Shanghai is also down though, 0.43% to 3636089. And as I said, I think there's going to be much more this week. Japan's closed today because it's a holiday,
yes,
but it's not going to be closed on Friday. So unless something happens, I think people will kind of stay. Do you think people stay?
People will stay, I suppose. So they need to look at the.
Before we move on quickly to the next one, it's already time for predictions. People are making predictions for the coming year. CLSA is saying that Asia is going to be due for the massive rally. I mean, we'll talk about it more in the days that comes, but it's an interesting thing to think about. Moving on to our hot stock of the day, we're looking at only World Group Bhd, up an impressive sign of 7% or 21 cent to 313. So the thing was, I saw the trading on this, and we both saw the trading on this the whole day. It crept up in increments. It was about 3.7% earlier in the day, then went up 5%, then went up 7%. I wonder if it's just because people were looking for things to buy and they saw this and they thought to cash in on the opportunity.
Yeah, I mean, look at the IPO price, right? It's actually
the old IPO price.
The old IPO price, which was listed. I mean, only World Group was listed in December 2014. It was at 88 cents, and now the share price has tripled to 313 today, and it is up 237% from 90 cents in January early this year. I think everybody wants to be fishing, for
bargain hunting, maybe.
Yeah, bargain hunting. Yeah.
Bargain hunting, but if it's gone up so much, I don't think it's a bargain anymore. But obviously, the reason why actually. The interesting about it was that CIMB research on December 18th said that this was why we talked about the stock today. They said that only World Group's share price could reach as high as 8 ringgit. This was his project to rejuvenate Komta Tower, which I've never been. Have you been?
Yeah, I've been to Komta Tower before, but it was
nice?
dead back then, so I haven't been since. So I mean, I'm looking forward to see how the Komta Tower there.
CIMB research Marcus Chan, who's actually a nobody of mine, he said conducted a site to Komta project. He's assuming 1 million visitors at 15 ringgit. It could actually lift the EPS forecast by about 11%, pushing share valuations to about 695, which is impressive considering it's only 313 now. I mean, what else?
And of course, there's other projects as well, construction, other projects, where the valuations can also push it a bit further to 8 ringgit. No, don't forget that they also have something going on in Genting Highlands as well.
Oh, well, they're a proxy to Genting Highlands, and if you see in their earnings, they did have some issues. They had more outlets, but they also had less, they had actually costs went up, so margins actually think. They can be seen a proxy to Genting, but they should see visitors returning once the new 20th Century Fox opens in 2017, but that's a big question mark. Anyway, just to wrap it up for this, why it matters, we are looking at Only World. They actually went up an impressive 7% today. CIMB research said that the new rejuvenated Komta Tower could lift their EPS as high as to 8 ringgit, but at the moment everybody's just holding firm. So moving on to our stock momentum, which is Lim Bhd, one of the two today, packed with positive momentum, closed 4% up, or 2.5 cent to 67 cent today. The stock's actually up by about 57% since mid-August. So what do these guys do? They make bricks.
Yes, they make bricks and also roofing tiles and also pavers as well. The company, controlled by Dato' Ng, who owns over 8%, was first listed in May 1996. Anyway, it's a relatively quiet company, Nadia, with straightforward business. As we said earlier, sales, 75% are domestic ones, and the rest are also sold overseas. Domestic market includes Johor, Malacca, Kuala Lumpur, and also Selangor.
But they were impacted very heavily by the electricity tariff, right? In 2014, electricity tariff, of course, went up by nearly 19%, wonderfully gradual. And electricity is, of course, a significant cost component. You've got to fire kilns, right? You've got to fire kilns to actually build those bricks. So I think they are very much tied to the property sector, but its research, the algorithm obviously thinks that the share price can go up even further. So I'm really curious what is there brewing behind for them.
Yeah, as you look at the construction sectors, they are very booming. New developments, right, they will require bricks and the very basic building block of foundations. And the company noted that the sentiment in real property showed signs of cooling with fewer new project launches, but still they can ride on the growth in these segments. How does the earning looks like?
Well, the earnings borrowings are quite substantial at 15 million, and the group has, and this is never nice to hear, which is negative cash flow. But despite the lower quarterly earnings, at least it managed to turn around. As you can see in the earnings, at least it managed to kind of break even. And it jumped. Some of the 9-month earnings jumped. I don't know. What do you think? Do you think the property prospects will hold on?
I think they will still do, because we still have a lot of projects that is ongoing, and I don't think the developers are going to stop it at that moment.
Well, okay. Anyway, just to wrap it up for you, pegged as positive momentum by the Edge Research is Lim. So this company actually makes bricks. The company has returned to the black, at least for the latest quarter, and it's kind of evened out. However, they're very much tied to the property sector, and let's see whether or not they can build on that. And also electricity costs, is that going to still be a concern for them moving forward?